Okay, we're live.
All right, we're live. Gotta act like you care. So, I was gonna talk about a couple things today. It's been a month or two ago, we talked about how to get your offer accepted, and we had some conversations about that. I wanted to kind of quickly go over some more ideas about that, and then also talk about our closing guarantee, because I think it goes in together with that. So, everybody knows that it's a tough market out there. Multiple offers, all kinds of crazy stuff. You guys are telling me all the crazy stuff. So I started to put together a list of things, how to get your offer accepted. And then I was also looking for a way to, again, thinking about the closing guarantee, how can we make it easier for you all to refer us, and for people to kind of catch it that, okay, Tim and his team brings value. And also, honestly, just, we need to have something special with the offers. I mean, either you can offer $205,000 over asking with an escalation clause on cash, which is not often. I think that would be considered an outlier. Or we just have to be able to go after some of these, these offers strategically. So when I started thinking this morning about the big things that we should be, that I think most of you know this, but it all starts with getting somebody pre-qualified, whether they have cash or whatever, just knowing that, what their position is. And then that's the big first thing. And then the second thing is educating the borrower about the market. So I know that you all do this, but I know that sometimes clients don't listen, so they have to hear it multiple times. And my joke is that, I can never remember all the stages of grieving, but I know the first one is denial, right? Mm-hmm. So I'll tell the client that. I'll say, well, we're going to tell you, and Matt's going to tell you that that the market's hot, and you're probably not going to believe us, and you're going to make a few offers, and you're going to say, wow, this market's hot. Then you're going to start to believe us and go on to the next stage of grieving, whatever, I don't even know what that is. So some people come and they say, well, I've been watching the market, stuff's on there for really not very, very long, and they kind of understand. But some of the things that I try to make sure that I cover in my pre-qualification, which again goes, not only is it the pre-qualification part where you know that they're actually qualified to buy, but we've had an opportunity to have this conversation with them as well. So I'm reminding them that properties are moving fast, that multiple offers are common. Seller pay closing costs are difficult, if not impossible, to negotiate. And don't shop at your max purchase price. Right? Oh, I'm pre-qualified for $185. I'm gonna go put me on the list for prices up to $185, maybe $190. Okay, they don't have any room to move. So having that conversation with them, so that they say, okay, you're pre-qualified for $180. Probably want to start looking at $160, and then. And I always say, I'm going to defer to your agent because they know more about the market than I do. But, this is just what I see. So I'm trying to soften them up for you, or try to at least they can look at they're hearing it from me, they're hearing it from you, they're hearing it from different ones, and like, okay, I get it. Okay, I can trust these people. Let's listen to them. So I spend a lot of time just educating them on the process, educating them on the a little bit about the market, and then whoever you're working with as a lender, they need to understand. Need to understand the basics. So they, I still have people that they don't understand closing costs. We had that conversation for a year. Closing costs. At least now we can't negotiate for the seller paid closing costs, so we don't have that conversation about seller paid. Other than that, then it's going to be an outlier that's going to allow those. Now, I will say that there's a little, I work with a lot of different agents, so I'll find that, I had one the other day, a VA loan, $300,000 purchase price, they negotiated $10,000 in closing costs. I'm like, that's great. I don't know how you did it, but, it may have just been I don't really know the background and how they got there. But if I tell them that it's going to be difficult, it's not impossible, then they at least understand, help those first-time home buyers that don't have any money. That a year and a half ago, with $500 in their pocket, they could buy a house with 100% financing. There's just people come in. It's like, well, you can make the payment. It looks good there, but you don't have any cash. So now we've got got to put you on a program to save money. Or do you have a gift, or do you have a non-occupied co-bar, or somebody that you can bring on. But I think that it's so important to have them pre-qualified, not just so you know the money, but also so that they kind of know what they're getting into. Again, I know you all are telling them the same things I'm telling them, but I think it helps to hear it from somebody else. And then something that I know Alexa and I had some good success with was having me call the listing agent. I think after we did the last one, the very day we did the last one of these, I called an agent. We got to, now, I tell the borrowers, I said, my charming personality is not going to get you 10 grand. So you got to be close. But if you're close, many times there's multiple offers, and there's a grouping there. So if we're within a couple $1,000s, then I call them and say, well, I've been pre-qualified them. I'm local. You know me. We've done business together before. They're looking for, what's $1,000 or $2,000 if it doesn't close. So they're, you all as listing agents, you're looking at it and you're trying to give the best advice to your seller to say, here's a spreadsheet with all 15 offers, but here's a cluster. This one makes sense. They're going to say, well, which one do you think I should take? Some of them say, I want the most money. Well, maybe the most money isn't the best deal for them. It just depends. Cash is king, but we can look at doing. Setting them up for success the best way we can. Then one of the other things is that when it comes to I'm having more and more buyers that are conventional, putting 20% down, which is great. I mean, generally speaking, those people have better credit scores. They're easier loans. They're bigger loan amounts, but they're easier loans. Now they can be a little picky, a little bit more prima donna sometime when I've got one right now. A guy's buying a $575,000 house. He retired from the FAA, and he owns $3 million worth of investment property in California. Moving from California, go figure. When did that start? But he's like, I don't know if house is big enough. It's like 7,000 square feet, So he's a little different challenges as opposed to, I need to go to the local money shark and borrow money for an earnest money deposit at 275% interest. Those are different problems. So, but when we're looking at that, if somebody's got 20% down, so a strategy that I talked to, actually the guy from out of state there, he was, once we start pushing the loan amounts, pushing the purchase prices and going over asking, it becomes, well, is it going to appraise? And so I've had some conversations with clients recently about, well, what if it doesn't appraise? And if they've got some money, if they're putting 20% down, people think that if they're going to put 20% down, they need to put, if they have it, they need to put 20% down. So, but I've had some conversations with borrowers and say, well, you've got enough to comfortably put 20% down and cover your closing costs. Well, what if, you make the offer on the place and you're offering $350 on a $300,000 place? Well, what if it doesn't appraise? What if you're 25 short? The listing agent is probably, whether the house is worth it or not, right? And you think, I guess, and is that a true statement? If you think, I've had people say, I don't know, I thought I was pushing it at 325 and now you're offering 350. So I'm not sure it's going to appraise. So they're concerned that it's too high, and should they take it because it won't appraise, and then it's all jacked up. Well, I've seen some where they would say that they would be willing to pay X number of dollars over the appraised value if it doesn't come in. So I don't know if you guys have ever seen those. But if somebody's putting 20% down, then I could tell them, if you just put 10% down, take that other, let's say it's a $300,000 property. They're going to put $60,000 down plus their closing costs. And let's say it appraises for on a $300,000 place. It appraises for $280,000. So the borrower could just choose to put 10% down and pay some mortgage insurance. Now, generally speaking, somebody with that, maybe 300 is a little low, but if they're doing a conventional loan, they have 20% down. They probably have really good credit, and so the cost for mortgage insurance, in that scenario, is like $50 a month. So So it's very, very inexpensive. You know, combining $50 a month with interest rates of 3 1/8, 3 1/4, it's really very, very inexpensive. So that would enable them, you know, just having that strategy talk would be able to say, well, if you do want to go over this and there is a concern by the listing agent, then you could put a clause in there that says, you know, they have the cash to be able to go up another 25 out of pocket because they really want the house, you know. So those are some things that, you know, somebody mentioned to me, maybe somebody here, I'm not sure, they were asking about, what was it, appraisal gap insurance? Have you guys heard that term? So it was like, well, if it doesn't appraise, then this insurance will pay the difference. I'm like, no, what it is what I've described, where you gotta have enough money, you can do mortgage insurance and allow you to put as little as 5% down. And sometimes mortgage insurance is really, really inexpensive. So
I've heard of gap insurance for medical, but is there such a thing as gap insurance for?
For an appraisal, I've never heard of it. I've looked for it, and the only thing I have found is somebody talking about, they would call it that, and then that was the name they gave it, but it was really
Something different.
Insurance, yeah.
They maybe just were familiar with that term and kind of applied it here.
Yeah. So people might be able to get their mind around it if you did that. So, again, the big thing is to get pre-qualified, and then, Paul, would you hand these out? I don't know if I gave these out before, but we talked about our, what I'm looking at is pyramid of qualification. You know, don't cheat and look at back yet. So the pyramid of, the back is the other side of the front. So the pyramid of qualification. It's coming. So the pyramid of qualification. So I put this together it's a visual that you might be able to use to share with your borrower. It's laminated, you keep it in the car, you know, it doesn't, I'm sure you could destroy it, but it's not as bad. You
Can
know,
I
it's
have
not
one?
gonna crumple
I'll
up.
put on the video.
So
That's
what I
okay.
like to do is, when I talk to a client, I talk about, well, you know, what we want to do is we want to move you up the pyramid. So at the very bottom, we're talking about online banks, big banks, in their pre-qualification. Many times, the borrower is not, just, you know, they're going online and they're putting in their information and they get, you know, a pre-qualification letter gets spit out. So, and you all know, I mean, I've had borrowers come to me that said, well, I've made so many offers with USAA and I'm not getting accepted. My realtor thinks that it's because it's an out-of-town lender. Whether that's true or not, I don't know. I like to believe that to be true. But, you know, and being able to share this with a borrower and say, look, you know, it's quick and easy. It's seen as unreliable many times by agents. Is a high risk of misunderstandings. I think that's the big thing. It's the high risk of misunderstandings. Is that, you know, I don't know how many times people fill out an application for me and I'm looking at their income and, okay, I see what it says. Tell me how much you really make. And they tell me, and they either grossly, like they're telling me what their net is every month, and I really need the gross, or you make $30,000 a month. No, I make $30,000 a year. Okay, there's a little bit difference. Okay, you might qualify for less with $30,000 a year as opposed to $30,000 a month. So going through and qualifying them with that. And then another thing that I'm finding, like I just talked to a fellow yesterday afternoon that he had been qualified by Rocket Mortgage, and the agent said, please talk to him. And so I'm talking to him. I'm just answering general questions. I spent probably 45 minutes with him on the phone, and I said, is this helpful? He said, yeah, I had no idea. You know, so he had gotten qualified. So technically he had told him that he could qualify or X or Y. But, you know, we got into the steps, the process, we talked about closing costs, we talked about the whys. He was able to ask a lot of questions, and so he came away just like, okay, now I feel better about, he's a first-time home buyer, I feel better about the process. So I think that there's a lot of, you know, and whenever I see somebody that comes across that's pre-qualified with somebody else, I just act like they weren't pre-qualified because it throws me off, because I'm like, I'm expecting them to be qualified. You know, and I'm almost have to change my mind and say, they're probably not qualified, make sure I find that. So the next step is, you know, a simple pre-qualification, and that's, I've talked to a client, we've pulled their credit, it all sounds good, it's quick. Most of the issues identified and addressed at that point, but, you know, there's sometimes when they tell you stuff and I haven't necessarily seen the pay stubs, sometimes I haven't seen the bank statements, sometimes I haven't seen, you know, they tell me they're a veteran, I have no reason to doubt. Now I haven't pulled their certificate of eligibility. Ooh, that's complicated, I wonder why I went to research. You know, those kinds of things. So, you know, what I try to do is be as quick as I can, so that I can give you a red light or a green light or a yellow light. So green light, they should be good to go. I mean, what's not to like about this guy? Or they can't buy anything. You know, don't waste your time. They got a 420 credit score. You know, they make $600 a month in Social Security, disability. They don't have anything. I wish I could help them, but I can't. So those are the easy ones to say no, and then you got the easy ones to say yes. The yellow ones are, you know, it might work. I just not really sure, or a lot of times it's like, well, they're probably qualified, but, you know, qualified for 125, but not 200 that they want. Those are really the hard ones. So what I want to do is, and I struggle with this all the time because I don't like making mistakes, so I want to give you all people that are really, really pre-qualified. But I also know that I get quick. So, like our buddies that came in the other day, you know, we made time for them and they came in and so I get into it and I realized that Kelly brought some people to the office and we went through some things with them, did the application with them in the office. Paul helped me with that, and then we find out that, you know, had been through a bankruptcy, hadn't reaffirmed their mortgage that they're in. It's like, oh, okay, this is complicated. You know, it probably is going to work, but there's a lot of things that can happen. So I don't want to share too much with you and scare you off with people, but it's like, yeah, this might be a challenge. So that's the pre-qualification. The next step is a pre-approval. So we've actually gotten their documents. We've gotten their documents, supporting documents, and we've gone through, like typically what happens in my office now is that I'll pre-qualify somebody, everything looks good, and I will say, Megan, who's on my team, I said, now I want you to put together the list for the client to get the rest of their documents in, so we can get them into a full pre-approval. So what I'm trying to do is every client that will participate, I want to get all of their documents, I want to get them in front of a real underwriter to make sure that we haven't missed anything. So at that point, we can turn around and provide a pre-approval. So pre-qualification is, I've pulled your credit, seen, you know, we've talked about it, it sounds good. Pre-approval means that it's actually been through underwriting, and we're just waiting on a property. Now, the top of the pyramid is fully underwritten, you know, they're waiting on a property, and they meet certain criteria. And I have to do this because there are like somebody could be fully pre-approved, but it's contingent upon them selling a house. Like some folks that came in yesterday, they were supposed to make $100,000 on the house, and they made 50. Okay, that changed everything, right? Because they had to do a conventional loan, there's different things we had to do. So I don't feel comfortable doing the guarantee when there's certain things like down payment assistance programs. Those change on a whim, and I could get caught real quick, like with the THDA, like, yeah, this changed, right? So the other programs do change, but they're not as quick to change as some of those down payment assistance programs. So I can have somebody that's pre-approved with a THDA, just not guaranteed. Does that make sense? So my hope is that when I call the listing agent, which is one of the things I want to, you know, the whole idea with this is trying to get somebody to where we can get them to have a better chance of getting the offer. When I call them and I can say, first of all, we've got they're pre-approved, they're fully through underwriting, that should carry some weight. And then in some of the other opportunities, we've got the guarantee, $5,000 closing guarantee. So the idea with that is that we've been through underwriting. They're, you know, unless they do something really stupid, like spend all their money. I mean, in most of these people's cases, it can be VA, it can be FHA. They just need to have money. And you know, I'm not going to pay out a $5,000 guarantee if they go buy a boat, right? I mean, that's not my fault. Now, my job is to educate them and make sure that they know what's going on. And so, you know, some people can't be helped, but the idea is that if I screw up, then I'm putting my reputation, my money on the line. So with that $5,000 guarantee is $1,000 that goes to the seller, or to the buyer, right? Because I've told them that they can do something, and if I really can't, I've really screwed up. You know, they've got, probably have, that we're serious, and we're not gonna give these out unless we feel very comfortable. So, does that make sense? So, any questions about,
It sounds like this is gonna be like a more typical strong buyer with less contingencies, so it can't be
Yeah.
resale contingencies, can't be, most likely 100% or grant program with closing cost
right,
assistance, stuff
it could
like
be,
that.
it could be VA, it could
Okay,
be
yeah,
3.5% down FHA.
Yeah, so like your
Um,
strong government-backed loans, FHA, VA, but not necessarily the ones that are tacked on to FHA or VA, like
That's correct.
USDA or the one that.
Chinoa?
Yeah,
is one
Chinoa.
thing. Yeah, so we still would do them with a pre-approval, we just wouldn't do the guarantee.
Okay,
That's-
so the actual
so-
guarantee that we can slap something on to,
Yeah.
it looks like this might be an email that you send out or
Yeah,
something like that?
so the intent is that we would take the pre-approval letter that we have, that's gonna be in a PDF form, and we would fill this out with their name and that stuff on it. And then what we would do is we would make one PDF and send that to you.
Okay.
Okay, so that when you attach it to the offer, then you don't have to piece the thing together, kind of get it
Okay.
together like that.
So when presenting this to buyers, we can say, hey, they have a program that you could be eligible for, which is a $5,000 guarantee if anything happens. Is that
Yeah.
something to be interested in? But, oh, cool, and then
Yeah.
send that way. That way there's wiggle room for like.
Yeah, and then, and again, selfishly, I mean, it helps you and us, I think, how do you refer us? So if you can say, we need to be able to show value, right? Why do you all work with us? It's probably Misty, but why do you all work with us? There has to be some substance, right? So, my thought is we just put our money where our mouth is and say, well, we need to make this, put this together. And if, you can, if you've got this, you could show, if you're meeting with a borrower in person, you could be able to go through this. Certain banks, certain online lenders and things like that, they just have this certain kind of reputation. So it's a tool for you, hopefully, as much as anything.
Okay.
So, does that make sense?
Yeah,
Yes.
that's really cool.
What do you think?
I think it'd be easier when it comes to negotiations if you do have that. It makes the seller feel more comfortable as a buying agent. That's, anytime you see guarantee out there, you're kind of skeptical about it, but,
Right.
if it's coming from the lender, they're obviously gonna feel that, okay,
Right.
this is respectable and this client is
Yeah.
definitely respectable and worthwhile
Yeah.
to negotiate with.
Yeah. And, I'm basically self-funding this, right? I'm self-insured on it, so, if it ever happens, I'll probably write a check out of my own personal check. So, just so you know, that there's some pain in here for me. if this happens, okay? So, because when I get corporate involved, I'm gonna have all these disclaimers and all this stuff. I wanna keep it as simple as possible, right? All the conditions on the borrower's pre-approval letter must be met. It needs to close by the expiration date listed on the pre-approval letter. So there's gonna be a date, it expires on a certain date. And, it's not valid, if the borrower or seller chooses not to close, right? So it seems obvious, but I'm thinking, I got people that will listen to me about little stuff. They're not gonna listen to me about the big stuff either,
Okay,
so.
you gotta state the obvious
Yeah, you gotta
sometimes.
state the obvious sometimes. So hopefully that's a tool that can help you. So let me think here, some of the other, I talked about the down payment assistance loans, those are the ones that we wouldn't be able to do the full guarantee on. Contingent on the sale of a house or another asset. Oh, I got a boat that I'm gonna sell and I'm gonna have this money, show me the money, I wanna see it. Manually underwritten loans, typically those have low credit scores, collections, something like that, and those are, I do them, but they're just volatile, let me just put that, they can be volatile. And then self-employed borrowers, now I'll take those on a case-by-case basis, it just depends on the self-employed borrower, but especially self-employed borrowers, I wanna get them in front of an underwriter. The program's pretty straightforward, but there's a lot of moving parts, and I had planned to roll this out a year ago, and then COVID hit, and all of the guidelines for all these loans started to change, and I'm like, we went from being able to do a 580 credit score up to a 620 credit score. The boxes got smaller. Self-employed people, it was like, no, probably just don't even think about doing a self-employed borrower, like after you guys bought. And so I've held off. I've wanted to do it, but I've held off waiting for things to stabilize a little bit. And over time, things have gotten relaxed and relaxed and relaxed, and we're basically back to where we were over a year ago, before things started to really tighten up. So, any questions?
What's the typical turnaround time by the time we give you a person and Audrey at your office is the best
Yeah.
point of contact to give
Yeah.
someone for pre-approval?
Yeah.
At least for that information. From that time to about when you think is a good time for them to be pre-approved, and then the guarantee thing, what's that typical time?
So the first step is pre-qualified. So once they get an application from them, they're on my calendar, and I meet with them. That could be the same day. It could be, what we like to hear, what we like to understand is, where are you at in the process? I'm just getting started. I really don't know we're just kind of starting to think, okay, good. That tells me that we can do this path, and it takes so long. Others we're under contract. Oh, you go to the front of the line, mister. Unfortunately, we get a lot of those. It's like, it's a lot easier for everybody if we've got a running start on these guys. But if somebody wants to go look at a house that evening or something like that, it's like, we're gonna try to do all we can to try to at least give you a red light or a green light or a yellow light. So typically what happens is, like yesterday, let's talk about one. Yesterday I pre-qualified the guy for the FHA that had been with Rocket. Sent out the pre-qualification letter. Actually, I finished up late last night. I sent it first thing this morning. Megan looked at his file and put together a needs list for him, because there's certain things that we got from him first, but we didn't have all the things that we needed to get him in front of an underwriter. So at that point, we send that to him, and the ball's in his court. So if he gets us the stuff back the same day, boom, we're in underwriting the next day. We're gonna get it there. But the sense of urgency by the borrower, it really depends, right? So they're like, oh, that sounds neat. I can't find that, or can't get that, or I'll get to it. So it's really, we try to volley quick, and then we're waiting for it to come back to us. Does that make sense?
Okay.
So once it comes back to us, we treat it like, we would put a real purchase in front of it, but, we're gonna take those documents and we're gonna put them together, and we're going to, the borrower has to e-sign a couple of little things, and we get an underwriting. We're probably 24 to 48 hours in underwriting, and then we'll come back with conditions. Obviously there's no property conditions, but all this could be done in a week if the borrower is
on it.
If they're on it.
2 weeks if they're delayed.
Definitely. If they're, we just have, we have people under contract, which we wanna help you, but
Yeah.
just send us the bank statement.
Yeah.
What do you do? So it shouldn't take that long. Really, most of the things we do, we're at the mercy of the borrower, and their ability. Sometimes they're lackadaisical. Sometimes it's like, well, I don't know where to find that. Can't get that document. I don't know where to go to find that. Especially self-employed borrowers. Oh, well, I gotta talk to my CPA to get those documents. I gotta get this, I gotta get that, But, sometimes you wonder, did they really tell me the truth? Because they're having such difficulty.
Yeah.
I'm glad we're going through this process, because if we weren't doing it now, we'd be doing it while you're under contract, and then there's other people, we're affecting other people at that point. So I I just made the decision, a couple months ago, we're just gonna put everybody, or offer everybody the ability to go fully through underwriting. I'd just rather do that. So, does that help with the timelines?
Yeah.
Okay. Speaking of timelines, I'm gonna mention, I don't know, have you all been seeing any challenges with appraisal getting pushed out?
Yep.
Okay.
There's one guy, and that one freaking guy, every time I see his name, I'm like, no, it's like the very earliest it'll get in is like 2 weeks after it was due.
Yeah.
The last
Oh my
one
gosh.
was a month after it was due. So like everyone, the sellers were like, well, we're not extending anymore. I'm like, it was USDA, and so it had to be sent back to them too, so we were like, we don't friggin' control any of this. The
Yeah.
buyer was giving in everything
Yeah.
when she needed, so.
So my challenge is, selfishly, what I wanna do is, I'd get a credit card from every borrower, and just as soon as we got the contract, I'd order that appraisal immediately, right? But that's not the best for the borrower, right? Especially, when, people have like 30 seconds to look at a house and they have to make an offer, and then they go back and look at it and say, oh my goodness, this is not the house I thought it was, so gotta give them time to have the home inspection usually. So we're, like, we wanna order that appraisal, but we don't wanna, I tell people all the time, I don't want you to buy an appraisal on a house you don't want. Seems kinda silly, but, if we're gonna do 30-day closings, I'm getting compressed here, so something's gotta give. So, you guys need to be aware of that too, so, I can, and, one of the thoughts is, well, I could go ahead and order the appraisal now, because it's gonna be a while. Just as soon as I do that, somebody will pick that sucker up, it's like, oh, that's my neighbor, I'll do that one. Oh my goodness, right? You never get one done in 3 days, and then this one happens to be the one that comes back. So, so we're always challenged with that, and so, I don't know,
Find the sweet spot of wait a little bit, but then, so I know for the one we have working right now with you, as soon as I talked to her and she said, yeah, it's looking good, not a lot of scary stuff. I said, Joel.
yeah,
So.
yeah.
Just kind of put him on it. We haven't negotiated out anything, but
Yeah.
it looks good, so it's like,
Yeah.
go ahead.
Is that the one in Greenville? Okay, good, yeah. So, I ordered one, the guy from California that's buying, and we got the order, he didn't have any contingencies, right? He says, I'll pay whatever, and I'll waive all the contingencies. So like immediately, we got the contract at 9 o'clock that morning, and we had it on order by noon. And so, I'm putting together I'm trying to put together things that I do a lot. I try to put together an outline or an email or a video that explains what's going on, so they can give it to the borrower, so that they can make the decision. It's not my money, so I don't want to spend your money on something that. But again, selfishly, I've just ordered like everybody. I don't know if other lenders may do that, but I need your credit card and I'm going to order it immediately, because in order for us to meet this timeline, we have to do that.
There are some lenders that just will do it. They'll take their credit card and just do it, and so when they back out, they get hit twice.
Yeah.
Inspection fee, appraisal fee.
I mean,
So it kind of stinks.
I don't know. I think it should be the decision. Everything I think about is that we need to properly educate the borrower so they can make an informed decision. And if they decide to spend the money, then that's great. They know what they're getting into. If they decide to not, and it might push the closing date out, at least they know. We've had that conversation. And so we all need to be working on the same. We just want to get closed. Nobody gets paid until we get closed. So same thing for me. I don't get paid until it gets closed. So. I don't know, any questions? I'm hungry, you guys got to eat.
Go eat. Thank you, Tim.
Thank you,
Waste away
Tim,
nothing.
thank you.